Okay, so we're live. Um, Welcome back to another New York session live stream. So we're gonna get straight into this one today. First thing we're gonna do is start off with our normal New York session pre-market analysis, and obviously today is the 29th of October. We've had a bit of a slow week. I was down a couple of percent yesterday. Was able to call it a little bit back, but most of yesterday was pretty much a poor day. Down 2% on my main trades. On my half% trades, took a couple losses as well, and then I crawled back another 1.42R on the larger trades. So I was down about 1.5, maybe 1.6% yesterday. It's not great, but these things happen. The main reason I was down yesterday was because um, we've got news. We've got news today, and really I shouldn't have been trading yesterday. So when we know that we shouldn't be trading, and we trade and we take losses, you have no one to blame but yourself. So that's why yesterday was a bit of a poor day. Nevertheless, we're gonna start our day today with our market analysis. Just to keep in mind that we do have news event today. Fed funds rate expected to be reduced by another 25 basis point, 0.25%. Followed by that, we have a news conference at 6:30. So the most ideal scenario for today would be to not trade at all, not trade any session today, not trade the New York session. However, if we do present a setup, we will probably take it at half the risk. Um, so what we're going to do first and foremost, we're going to identify what our trading analysis is for the day. So let's just copy and paste this into our pre-market analysis. So obviously at this current moment in time, if we take a look at the chart, I'm going to run through this quite quickly because it is pretty much all still the same as it was yesterday. We are in a bullish uptrend, and the reason we know we're in a bullish uptrend is because the market's just been making higher highs and higher lows. So we know the market's in a bullish uptrend first and foremost. So the first thing we know is that this certainly stays the same. The market is bullish. Our external target was the highs. So we know the highs is our external target. Has liquidity been taken? And if we take a look at the charts, I'm going to explain to you why our external liquidity has been taken. So external liquidity counts as the level that the market peaked at before pulling back, and we can see from here that price rallied up, peaked, and then we pulled back, and then price rallied further. And if you can see right here, we can see that price actually came and took our external liquidity, and we left an opening gap the day after. So the reason why this is important is because we're gonna now expect this gap to be closed at some point. The way this gap gets closed is what's going to be the defining factor of the trade that we take. But one thing we do know is that our external liquidity has been taken, and that is factual. So I'm going to add a yes to this statement, and that's going to allow us to be able to look for potential trades in the reversal direction. Trades targeting intraday liquidity would be what we're looking for. So I'm gonna get rid of this. So we know that if external liquidity has been taken, we have the opportunity for a potential reversal, and we can take trades targeting our intraday liquidity. So just to be clear once again, we're in an uptrend. Market's trending, so we can get rid of all of this, and then we can now look to try and spot our liquidity map for the session. First things first, we know we have an opening gap that has not yet completely been filled. So I'm going to also mark this out. Important opening gap. Slash fair value gap that has not yet been filled. Um, Next thing we're going to do is we're going to keep an eye out for whether or not we have any intraday liquidity. And at this current moment in time, we have this level of intraday liquidity right here. We also have this level up here, and we have this level up here. So we have liquidity at highs, but the first level of liquidity we're going to keep an eye out for is this liquidity right here. This could be an important level going forward today. And on the downside, we've got this gap right here, which we're going to keep an eye on. And we also have our London session lows, which I managed to mark out earlier in the day, as well as having previous London session lows, previous session lows from the previous day. So this level is also very important. So as you can see, we have liquidity to the upside and we have liquidity to the downside. So in an uptrend, and the reason why this is important is because in an uptrend, what we'd expect to see, with the idea that we're going to target liquidity at the highs, you're going to see price pull back, sweep liquidity out, and then rally higher. That's what we'd ideally want to see in an uptrend. However, given the fact that we have this wonderful reversal potential setting up on the markets, given that our external liquidity has been taken and we've seen potential reversal conditions, we could actually find ourselves an opportunity to actually see liquidity get taken to the upside in an attempt to target liquidity at the downside. And what that would mean we'd also be able to target and close our gap underneath, while also coming back down as well to close below our external liquidity and begin a decline. So this is why it's important that we mark out both sides of our liquidity map so we can understand where the potential places for price to go is. At this current moment in time, we have to keep our eye out for potential reversal conditions. So we're going to be wanting to see where liquidity gets taken first and whether or not liquidity gets taken to the upside. And if it gets taken to the upside, then we could start targeting our lower levels of liquidity down here and down here. However, if we see price come down immediately and target our liquidity down here, then we could see this gap filled and then price rally to target the highs again. So there's multiple options that could take place today, but just the idea that we've already swept our external liquidity means that there is a potential for reversal today. So that's why we're keeping our eye out on that. This is a if then process, and the process of if external liquidity has been taken and we march yes to this, then there is a potential for reversal trade for the day. If we keep on moving forward, we establish the trend, markets trending, established our liquidity map for the day. The final liquidity map that I want to keep an eye out for and also discuss would be our previous day's highs. And funnily enough, I've already marked out the previous day's highs up here when I was mapping out our internal liquidity, so that's perfectly fine. But this is also a very important level. So if we do get a sweep of our previous day's highs, there's a chance that we could end up coming down to target, and I said this already a moment ago, we could come down and target our London session lows, our previous session lows from yesterday that's unswept, and then close the gap as well. So that's gonna be this potential reversal condition playing out in quite a short space of time. We'll see how that plays out for the day. But given that we've got news today, Fed funds rate, the statement and the press conference, ideally we want to just sit out the markets today and not do anything until after the news release and the data's been released and the conference has taken place. So that's something we're going to keep an eye out for. However, the catalyst for decline could be selling the news into the event, and that's why we're still going to create our map, our pre-market analysis. We're going to conduct a pre-market analysis, which is what we've done. We're going to create our map for during the session, and that's what we've done here. The final thing on this is whether or not the hourly chart and the 4-hour chart are in confluence with the overall trend. And now we know the overall trend is, we know it's bullish because we're already creating higher highs and higher lows. So we already know the market's bullish. But what we want to know is the 4-hour chart and the hourly chart also bullish? And if we take a look at this, the 4-hour chart had been printing higher highs and higher lows given the gap. However, we seem to have some consolidation taking place here, and I assume that's in anticipation for the news, that we just see some consolidation taking place, so that the 4-hour chart is actually consolidated. So that's not giving us a clear signal. Although we had been making higher highs and higher lows, this closing down was a break of structure, and then this closing up is also a break of structure to the upside. So break structure to the downside, break structure to the upside. That's what we call a consolidation. On the hourly chart, same things going on. Consolidation. We're seeing price decline, make lower lows, and then break out to the upside, which is indicating, this in itself is indicating more of a bullish trend. But I would argue that this is just consolidation, because if you see from here, we came down, pulled back, came down, and then we rallied back up. And then this break of structure indicates to me that this is more of a consolidation than any pattern in itself. And I'd assume that it's just an attempt to target our previous day's high. So this is giving no clear signal at the moment, and that's why we can't mark this out as in confluence with the overall trend. So for this final one, I'm going to mark out really quickly 4-hour chart, hourly and 4-hour is giving unclear signals, and they're in consolidation. So given that this isn't giving us any clear signals today, we don't have any high probability setups, so that means we can't go max risk on our trades. So what does that mean? That means we have to limit our risk for our trades simply based on the fact that we don't have any high probability setups. So the way I do this is I just cut my risk in half. Any trade that I take, instead of risking my max position, I'd risk half the position. This is how I defend myself when going into the markets with lower probability setups. That being said, obviously we do have a potential for reversal signal. So if we do get a sweep of the highs, and then we have and then we present a sell signal, there is a chance that we could still short the market down from up here. However, this isn't a great setup going forward. So ideally, we'd want to just sit on our hands in anticipation of the news event taking place later on today. Alright, so that's what we've got so far for our pre-market analysis. Going forward, we have a potential short trade today, potentially. However, the overall trend is bullish, and this conflicting signal makes it likely that we're going to see a no trade day, and that's because the hourly and the 4 hours giving unclear signals. So it's most likely going to be a no trade day. Most likely in anticipation Alright, so the reason it's important that we analyze this prior to the market opening is because we don't want to go into the markets, into the session open. We don't want to go into it without a game plan. We want to enter the markets with a clear game plan. We want to know what we're expecting to see. We're going to and I want to know where we're expecting to position and where we're expecting to target. And when we're seeing conflicting signals, when we're seeing the hourly and the 4 hour in consolidation, when we're seeing the daily chart and a bullish uptrend, however, external liquidity has been taken, we're seeing so many signals in so many different directions. Um, the best thing to do is just to sit on your hands. As a trader, you want to take the highest probability setups. And I'm not saying to you that you're not going to have opportunities to take trades in the market. Of course, there's always an opportunity to make money. The question is it a good trade? Is it a repeatable trade? And if your trades aren't repeatable, you should not be taking them because you can make money from luck once or twice. But can you take the same trade over and over again every day or every week? And when you can do that, that's what actually makes you profitable. Being able to repeatedly take the same trade over and over again. That's what sets people apart. And so when I come into trading, that's what I'm looking for. I'm looking to see whether or not individuals, I'm looking to see whether or not people actually know what it takes to be a profitable trader. What it means to be a profitable trader is someone who's able to take the same trades over and over again. And a lot of people don't realize this. Some people believe that you can make a few £1,000 um, trading with prop firms and somehow you'll be able to do it again. I can tell you that the reason why prop firms make money is because your fluke that you made 10k on, you're not able to do that again because you have to pass two stages, and that means you have to avoid drawdown, and that means you have to pick winning trades. And the reason most people can't pass prop firms, the reason the vast majority of people aren't funded is because they can't repeat that. They can't get that stroke of luck again, unfortunately. And so that's why I try and emphasize to people, you know, when you get into trading, you need to get into trading with a mindset of consistency and repeatability. It can't be luck. It has to be skill. And so let's see what we can do. Let's see what takes place today. Let's see if there's any opportunities to make money in the markets today. However, the main thing is we want to take the highest probability trade setups. And if it's not high probability, you want to sit the market out. Alright, perfect. So as we wait for New York session to open, feel free to leave a comment in the chat. If you have any questions about my trading system or my level of profitability, how long did it take me to get here? If you have a question about what it takes to be a profitable trader, if you want some advice, feel free to leave a message in the chat, and I'll respond to them as we await the New York Open. Okay, so we should be seeing price move quite drastically and aggressively towards our target, um, which is our previous day's high. And once we reach our previous day's high, we should see um, some sort of resistance. Hopefully, price starts to get some bearish momentum to push price back down. As I said already, this is a little bit of a consolidation, so I am expecting um, this sweep of liquidity now to become the catalyst that draws price back down to our London session low. And based on our market pre-market analysis, we know that we have a potential reversal setting up today, and um, in that situation, we'd be able to take short trades targeting our intraday liquidity. And if we take a look on here, our intraday liquidity is this gap here, as well as London session lows, as well as this level that was not swept yesterday. So this is our London session lows from yesterday. So we're seeing liquidity pull up around here. So if we can get a sweep of the highs, that would be further liquidity to the upside. And then if we get some selling pressure to come in, it can force price all the way down. That being said, we have news today, so this news is going to be actually a very important indicator of where price is headed next. So if we don't end up seeing a sweep of liquidity during the session, this actually might take place at the release of the news, 6 p.m. UK time. I think it's around 12 o'clock. No, not 12 o'clock. Around 2 o'clock New York Standard Time, Eastern Standard Time. So that's what we're looking at today. We're looking at whether or not the market's going to give us an opportunity to sell the market down during in the session. And if we don't get a sell opportunity in the session, then we'll look to take the position potentially tomorrow. However, obviously at this current moment in time, we seem to be targeting our highs, so that looks like where we're heading next. I just had to point out, on Monday I did want to try and get long here. However, I wasn't able to get long in this position. I mean, I did get long, but I ended up closing out the position at break even. And then we've just had a rally straight through. Not an easy rally, but we've rallied quite substantially on Tuesday. And so we're looking to see whether or not this rally is going to continue over this day. But if it does continue, there's a potential chance we might actually have an opportunity to sell the market down. I don't want to take this short position prematurely, so I'm just going to keep my eye on it. If you've got any questions, feel free to leave a question inside the chat, and I will answer. I will try and get to those questions as soon as possible. So yeah. So we've got a couple more minutes until they open. Market's going to be quite quiet today, I'm expecting. But we are still expecting price to target our highs in an attempt to sweep liquidity before coming back down to close the gap. We do have news later on in the session. We have Fed funds rate towards the end of the day, so markets are probably going to be a bit quiet in anticipation of the news event. So we're going to keep our eye on that. What we do want to look for today in session is we want to look for potential reversal in an attempt to target our intraday liquidity resting at London session lows. So we want to see a sweep of this high up here, and we want to see price print a red candle and begin its descent down. So we're going to keep an eye on that and see what happens in the session. There is no guarantees, and I'm not advocating for that trade idea, simply because we've got news. So the anticipation of a no trade day is probably the highest probability outcome for my trading session. But I will be keeping an eye out to see whether or not we have a sweep of liquidity at the highs, and if we do, that might just present an opportunity we're looking for in an attempt to target these unswept levels of liquidity. And the reason why that's going to be good and beneficial to us is because this news event today could just end up being a sold news event. We are in a seasonally weak period of the year, and we haven't actually seen that seasonality kick in yet. So a little bit of a pullback towards the end of the month wouldn't be so bad at this point, especially considering we've got this unfilled gap right here. So this could be the catalyst for the decline, the news event later on today, and it could be the beginning of a minor pullback or correction. So we're going to watch these highs. That being said, going into the session, we've already seen a little bit of a sweep of liquidity. We'll see what happens anyway. Best of luck in session, guys. Yeah, we're seeing a little bit of a sell down. We want to see this confirm at the close of the candle, so we don't take any trades based on the impulse. We wait for candle confirmation, wait for the actual data to be printed, and that's another 15 minutes away. So in this little volatility session that we see at the open, we're likely to actually see this potentially reverse and target our highs. So at this current moment in time, I'd say just sit on your hands and wait for the candle to actually confirm the direction at the close of the candle in 15 minutes. Alright, guys. So we want to keep our eye on this level of liquidity right here, which is previous day's highs. Previous day's highs could provide a perfect opportunity to sell the market down into our session lows, or London session lows, I should say. So we want to keep our eye out to see what happens at this previous session high, at this previous day's highs. If we do get a sweep of the previous day's highs, you'd want to watch this and see if we get a candle print to return into the range, and then we could see price end up targeting liquidity at lower levels. So this could just be a rally higher to induce people into buying before the market comes back down and then completely reverses. And I've been looking out for potential market crash. I see that taking place very, very soon, simply because this gap needs to be closed and we have taken external highs. So that's why it's important to be patient, wait for the market to actually present a setup before getting in, and wait for liquidity to be taken. This level's not sitting here for no reason. The market participants, institutions, they are going to force price up here, and that could take place in two ways. The market could either rally through it, or we could see price, tap it and then come down. So you just want to wait, pretty much. You just want to wait. As a trader, as a trader, you wanna know when the best times to sit on your hands are, and that actually sets traders apart. The best traders know when to set out the markets, and today is one of those days where you just don't want to be in any trades. We've got news later on, so the best thing to do is just wait. Really and truly, the best thing to do is just wait, unless the market actually presents you with an opportunity. And I call this a low probability setup, simply because we don't have many confluences. We do have some, but it's nothing worth winning, nothing worth putting high amounts of capital at risk for. And based on that idea, we could just sit and watch the markets. What's the market gonna do over the next, hour or two in the session? And my basic premise is we're just gonna see trot. It's gonna see the market chop around, and then maybe when we get to the news release, we get a spike in particular direction before we go down. Or we could see that take place in a different way. We could see the market actually spike to the lower side, tap into our gap, fill the gap, and then rally. So there's quite a few opportunities that could take place, and this gap is more down here really. But there's a few different opportunities that could take place. But in anticipation of the news, I assume the market's just going to be choppy and messy. Take a look at the 1 minute chart. Since we opened, it's gone up, it's gone down, it's gone up, it's gone down. And I assume the session is just going to sit inside a range, something like this. I might be wrong, but when there's news, you just expect it to be horrible price action. This isn't what you want to trade. You don't want to trade in the market's ranging like this. You want to trade when the market's doing something like this, and I'll show you. You want to trade when the market's just completely going straight up. And there's been so many opportunities to trade like that. I was actually on holiday this week, so I can't tell you what the market was like that week. But these weeks when the market's clearly picked a direction, you want to be in the markets when the rally is clear. And it's usually during New York session that we get these opportunities. There you go, in New York, opportunity to buy it. So that's the point I'm trying to make so far. But we'll keep on watching this for now, see whether or not we are able to target our highs. And if we do target our highs, once again, I said to you, we are most likely going to see price pullback. But it's going to take some doing. We are approaching it slowly, so we'll see what happens. All right, so we're seeing price move quite aggressively um, up into our targets. As I mentioned already, I did state, any pullbacks were likely to result in some buying pressure, and that's what we've seen. So now I'm watching and waiting to see whether or not we have a rejection of this high, and if we do, we'll be able to short the market down to here. But we need to see an aggressive sell back down into the range. So that's what we're watching out for. We've got to wait for the candle close. Always wait for the candle close. So we want to see. I was saying we want to see. You probably didn't hear me, but we want to see this come back down and close inside here. So we're waiting for a 15-minute candle close. And then I went on to say, what do you think about my food? It's pretty green, mainly potatoes, a bit of fish. But yeah, I'm gonna wait to see what this candle closes at. Give it another 15 minutes, 13 minutes, I should say. We're seeing a little bit of a pullback, which is good. So I want to see this close. So we're gonna give it the remaining 10 minutes. That's what I eat. Right, so we just got about 6 minutes until the candle closes. Um, we haven't had any indication that price is going to come back down at this current moment in time. And the hourly has really taken off into really a mind of its own in regards to bullishness. So unless we can get a massive wick down in the next 5 minutes, we're likely just going to continue this trend higher, which is expected, considering we've left this gap here. We've sort of just gapped higher. We put the lows in the week on a Monday, which is around here. So yeah, it's expected to just continue to go up and up and up. Lovely move on US30 today. Unfortunately, we couldn't participate. Let's watch how this market really plays out today, though. It's not completely out of the woods. We can still come back down in the next 5 minutes, but I highly doubt it. We'll keep our eye on it, though. Alright, so keep your eye out. Keep your eye on this. I'm keeping my eye, certainly keeping my eye on this. If we manage to get a close, I would say close inside the range. So red candle potentially close. Red candle close inside the range. So if we get a close below 9.4, 9.40, um, we could potentially see the market, begin to decline. So we're asking a lot over the next couple of minutes. If we don't, we just sit out and wait. But given that this is our previous day's highs, we do have liquidity resting there. So if we do want to get short, that is the place to do it, and that's exactly why we're keeping our eye out on that level. So yeah, keep watching that over the next couple of minutes. Stay tuned. Okay, if you want to be aggressive, if this candle closes red, you might want to get short. Um, I am still trying to decide. On a 5 minute, it does look like it's engulfing. It does look like it's a return into the range. But I'm going to be a bit more cautious with this, only because we didn't actually get a red candle close. So maybe I might wait for the next candle on the 15 to confirm a close. Um, and if that does happen, if we do get a red candle on the 15, if it does go down, then what I can expect is for this to begin be the beginning of some sort of decline. And there would also be a shift in structure on the 5 minute chart as well, which isn't too bad. Um, so yeah, gonna keep our eye on this one. I do sort of want to get in aggressively. Let's do it. Just because we're at such high levels, let's actually get short. Yes, and we've got in at half the risk. And it seems like we're just going to continue going higher. This is not a great trade, but we'll keep our eye out on the 15 minute chart. See if we get any further selling coming in. Um, and then if we want to add to it after the candle closes back in the range, then we have the choice to do so as well. So we'll keep watching that. I haven't been positioned very well. From what I can see on my chart, my position's around here, 100 point stop loss. So if I get stopped out on this, um, it's not horrible, but obviously it could have been much better. And this would be the trade for our trade. We'll keep our eye on that. Alright, so as I mentioned already, before I add to this position, I'm going to want to see it close back inside the range. So I have got a small position already positioned um, at this current level, and that was based on a 5 minute chart. It's based on just coming back into this 5 minute decline. So I want to see a 15 minute candle close before I get short. That's what I want to see. That's the most ideal trade. You want to wait for 15 minute candle close confirmed inside our um, liquidity on the upside. You want to see that actually take place before you get short, and that's why I got in partial entry. I will add to it. The only reason I got in is because there's a chance this just runs away from us. Excuse me. There's a chance this just runs away from us. So I wanted to be a bit cautious about the entry. I don't usually take trades based off the 5 minute. However, given that we're at all time highs, very very close to all time highs, and we haven't yet targeted our previous day's liquidity or today's liquidity, it would make sense. Um, Given a 5 minute candle wants to close, we also have this gap over here. Um, Given the 15 minute wants to close down, if it does close down, it will absolutely just fall off a cliff. So I did take the opportunity of getting in partial entry. Um, I did take that opportunity and I did that based on the 5 minute chart. So I'm just gonna keep watching this over the next 10 minutes as we wait for the 15 to close, and it should be a bit of a waterfall decline if this does happen. So I'll keep watching this. We'll see what happens. Right, so we're starting to see a little bit of an acceleration, which is perfect, exactly what we've been waiting for. Starting to run up into profit a little bit now. What we want to see now is we don't want to see the market, we want to see the market close inside today's high. And what I mean by that is we want to see us get below there. But once we do get below there, we want to see displacement down. That would be an indication of further downward movement, and we'd expect it to target our London session low and our previous day's unswept liquidity, which is our London session low. Our London session low from Tuesday's session. So we want to see all of that be targeted today. But first, we'd want to see this close inside on the 15 minute chart. We want to see this close below the previous day's high. So that's the first thing we're looking for. Um, so yeah, we'll just keep our eye on that over the next 5 minutes. We should see some aggressive movement take place over the next 5 minutes. The last 5 minutes of every candle should be the most aggressive part of the 5 minutes. So we'll keep our eye on that. All right, so we want to see price continue to push down, and we want to see it close below our previous day's highs. Just to be clear, if I jump onto the daily chart, our previous day's high has been marked out with this white line, so that's the line that we're approaching currently, and we want to see this close below the line. And when it does close below the line, I will add a position. I do currently have already a position running, but I want to see this. I want to see this a second. I want to add a second position to confirm it, as my first position was based off the 5 minute. It's not usually how I get position. I usually get position off the 15. So if we do get that sort of confirmation, then I will happily add another position, um, and my risk will remain the same anyway. But you know, um, I will happily add another position. All right, keep an eye on that. I'll let you know what I do. Alright, I'm just about to add another position, just waiting for it to get a little bit closer to the close of the candle. Um, I think I'm gonna add right about now. Alright, I've added another position. Put my stop loss 100 points away. So now we've got a second position added on, and that is our um, inside our previous day's highs. So that should act as a protection for us in regards to the upside. We shouldn't see, because we've seen quite an aggressive movement down, we shouldn't see an aggressive push up. Um, we should actually see continued bearish movement from where we are, and our previous day's high should act as the resistance. So we want to see an impulsive move immediately to the downside. Let's see if we get that impulsive move. I'm gonna keep our eye on that. Alright, so we're waiting on this to continue this aggressive move down, but we are seeing some rejection. One thing I do want to point out is we didn't manage to get a close inside, so we're gonna try and sort that out on the next candle. But the fact that we didn't and we've taken liquidity at the lows means that we could actually see a massive bounce from here. So it's important that we do get some impulsive movement down over the next 15 minutes of this candle. If we don't, we are at risk of a massive skyrocketing in price. Um, my belief is that we do come down simply because we've got quite a lot of liquidity and um, we've got gaps to close as well. So my belief is this gap needs to be filled. The daily chart gap needs to be filled. We need to target this level of liquidity down here as well as this level of liquidity down here. So my belief is that we do, have the decline that we're looking for, but you want to always manage your risk. You don't ever want to be. There is no guaranteed trade. Um, I wouldn't say this is an A plus setup, but it is a good trade setup and it is worth the risk that I've put on the table. If it's not worth the risk, I wouldn't have positioned into this trade at all. It is a decent trade. It is a good trade. It's against the trend and it's a permitted reversal trade. As I said already, if we take a look at our playbook, we've got external liquidity that's already been taken. Um, and when external liquidity gets taken, we are permitted to take reversal trades. And we had external liquidity taken on this day. All of this is just a liquidity sweep, so this could just be the start of a massive crash, and that would be perfect because that would be the catalyst. Today's Today would be the news event today at 6 p.m. would be the catalyst for that decline, and that's why I'm happy with where I'm positioned. Um, from where we are, that would look like if we measure this out from where I've positioned, that would be uh, 28 R trade, um, probably more 30 R. At the very lows, it would be maybe 33 R. This would be an exponential trade. So it is an amazing trade setup, I do have to say, and it is worth the risk. We'll keep our eye on that anyway. Well, it's not looking great, but it's not horrible either. Um, one of my trades slightly in loss, the other one is in profit. But we want to see this market absolutely turn down now. We don't want to see it continue to make high highs on a 15-minute candle. So if it was to turn red here, that would be perfect. If it was to make a new high at this moment, that would be bad. So we'll keep watching that. Um, as I said already, the previous day's highs should be our resistance, and we should see some selling coming in the last 5 minutes. Yeah, that's not great. Alright, so we do need to see this close red, and we do need to close aggressively red. So I don't know. I don't really know how to feel about this. We just wait and see, but it doesn't look great. We're struggling to get below 50. So if we can get below 50 on my chart anyway, 9650, then we should be able to go down. But it seems like we're struggling to cross that mark, and that's not great. So anywhere we see buyers joining, that's an indication of higher prices, and that's what we're getting. So we need to see continued selling in this final minute. And we are getting a little bit of selling. We've got 30 seconds. Is it going to be enough? That's the main question at this moment in time. Is the selling going to be enough to push us into a red candle? Let's keep watching that. Alright, so given the fact that we closed green, the only thing that would bring us back would be a massive engulfing candle to the downside. That's the only thing that could bring us back at this current moment in time. This is not a good candle setup, um, but we'll keep watching it. We'll be patient. Potentially even remove some of the risk if we do get an opportunity to. But it's not great from where we are. Like this bounce right here is not great. But we'll keep watching. We need to see an engulfing candle to the downside to tell us that the sellers who are at the liquidity at previous days highs really are here and they're not here to play. And that's what we're watching for. Alright, so it's starting to look a bit better now. As I said already, we needed to get an engulfing candle to the downside, so we need this level to hold. On top of that, we'd want to see the market pretty much crash from here into the news event. That would be the ideal scenario, ideal situation. We don't want to see price get back above our previous day's highs. You don't want to see the 4 hour chart crash down. You want to see it make a market structure shift on the 4 hour chart. You want to see the 1 hour chart switch into a downtrend as well, which is just consecutive hourly candle down candles. So that's what we're looking at. But what's beautiful is we are back in profit. Don't know how long that's gonna last, but what we can do is watch and wait. We've got 5 more minutes until this candle closes on the 15 minute, so we'll need to keep an eye on this. Stay tuned, see what happens, right? So what's not great about this position is that we're struggling to break our previous day's high, which is never ever a good sign. Obviously, we need to wait to see how the candle closes, and we are seeing a little bit of acceleration into the final minute. But we need it to break that previous day's high and close below it. If we can't get underneath there, then we haven't got a trade on. So we'll keep an eye on this. But this last 40 seconds is really important. We need to see it break.